This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending April 3rd, 2021. Our question this week is, what is the yield curve? The answer will be provided later in the video. This week, the market ended up. The Dow Jones Industrial Average increased 0.52% on Friday and was up 0.24% for the week. The S&P 500 increased 1.18% on Friday and was up 1.14% for the week. The Nasdaq increased 1.76% on Friday and was up 2.6% for the week. Looking at the week, we can see that there were 6 up finishes versus 6 down finishes for the major indexes. The market was closed on Friday. On Monday, only the Dow Jones Industrial Average ended up. The S&P 500 and the Nasdaq ended down. On Wednesday, it was just the opposite. The Dow Jones Industrial Average ended down while the S&P 500 and the Nasdaq ended up. On Tuesday, the 3 major indexes ended down, but on Thursday, they all ended up. The S&P 500 reached and closed at an all-time high this past week. The new unemployment claims were 719,000 versus 675,000 expected. Continuing unemployment claims were 3.8 million. Private payrolls rose at the fastest pace since September. The US manufacturing sector index hit a 37-year high. Pending home sales fell by 10% in February. And the US Treasury is going to provide the International Monetary Fund, that is the IMF, with $650 billion. New unemployment claims, continuing unemployment claims, private payroll changes, the US manufacturing sector index, pending home sales, and the US Treasury granting to the IMF is all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and the Congress. These 5 entities will do what they must to drive the market higher. Notice how the market went up on Thursday when it was reported that the US Treasury was going to provide the IMF with $650 billion. Now we are at our question of the week. What is the yield curve? The yield curve, that is the US Treasury Yield Curve, is the interest rates across different US Treasury maturities. US Treasuries have maturities that are from 1 month to 30 years. The interest rate for each Treasury maturity should, in theory, increase the further out the maturity date. Thus, when presented on a chart, the yield curve should be upward from left to right, when the shortest maturity is on the left and the longest maturity is on the right of the chart. Do you own any US Treasuries? Do you own any stocks? If not, why not? Are you afraid that the market may fall again? The market at some point will fall again, but as you can see, it just reached another all-time high. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is my trading watch list for the week ending April 3rd, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC. It is in the second column. It increased 9.56% for the week, and it was up 1.65% on Friday. Grayscale has been the best performer on the list several times. Grayscale is an investment vehicle, like an ETF, that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safekeeping Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased almost 59% year to date. I own Grayscale shares. I do not generate cash flow from Grayscale because they do not have option contracts. I use options to generate cash flow from stocks. I use Grayscale as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio is outperforming the S&P 500 index ETF SPY. The Southside Portfolio is up 16.11% versus 7.15% for SPY, a difference of 8.96%. The Southside is beating SPY by 8.96%. This week, equities, including puts, calls, and ETFs, make up 85.72% of the portfolio. Cash is 14.28%. The cash flow generated for this week was 1.15% of the portfolio account value. The account value changed by 5.37%. Meanwhile, the S&P 500 ETF SPY changed by 1.17%. I sold option contracts on 5 positions this week, 3 calls and 2 puts. That ranged from $102.67 to $506.70. I also received a dividend of $144. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com.
If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschoolofinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales. How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia. Available on lulu.com and amazon.com. Please like, share, subscribe. ADOS.